This episode is brought to you by LifeLock. The holidays mean more travel, more shopping, more time online, and more personal info in places that could expose you to identity theft. That's why LifeLock monitors millions of data points every second. If your identity is stolen, their US-based restoration specialist will fix it, guaranteed or your money back. Get more holiday fun and less holiday worry with LifeLock. Save up to 40% your first year. Visit LifeLock.com/podcast. Terms apply.
It's the Larry Kudlow Show. Free market prosperity starts here. Now, here's Larry Kudlow.
Welcome back, everybody. Larry Kudlow Show. You can get us on the internet. Live stream us on the internet. LarryKudlowShow.com, LarryKudlowShow.com. You can hear us everywhere, across the country, around the world, throughout the solar system, including the Milky Way. And please, during the week, I invite you to join us on Fabulous Fox Business Network. Name of the show is Kudlow, 4 to 5 p.m. every day, Monday through Friday. If you can't make it at 4, just text your favorite 9-year-old, and she will show you how to DVR the show. You'll never miss a thing. So, we're going to talk stocks. We've got two of the best, Jim Iuorio, TJM Institutional Services, Kenny Polcari, Kace Capital Advisors, and SlateStone Wealth. Gentlemen, stocks are all of a sudden slumping, and I have a theory. My theory is because some dummies in the Senate and even in the Transition Committee are talking about delaying the tax cuts. And that was one of the reasons for the big rally following the euphoria of Mr. Trump's big election victory. Tax cuts and deregulation, and that could be delayed. And stocks are listening to this and don't like it one bit. That's my take. Ken Polcari, what's yours? All right. Ken just dropped out, so we'll go to Iuorio. Iuorio, what do you think of this theory?
That's my favorite thing when the other guest is gone, so then I can just hear myself talk the whole time. So this is like an early Christmas present for me, Larry. No Kenny to bug me.
He's coming back.
Oh, sure he is. Okay, good. Okay, so I think you are definitely half right about this. I think that any talk of, but you said the key word in the whole thing, transition. This is a monstrous transition from whatever we had, you ever want to call it, the last 4 years, a regulatory mess and a nightmare and a labor market that was trash and was presented to us like it was good, despite the fact that all you had to do was look under the hood. Now we're going into obviously greener pastures. And last time I was on your show, you yelled at me for saying that it wasn't going to be that easy. You want to just blow the horn and say the cavalry's coming. I don't think it's quite that simple because of things like this. And now you look at like all the regulatory reform, the tax reform, everything it's going to address. We are going to run bigger deficits in 2025 than we did in 2024. I personally don't think it's a big deal, and I think global demand for our bonds will be fine if they think we're on the right path. But in the transition of trying to go from bad to good, it scares the stock market a little bit, and that's why it's sideways. That being said, I'm still fine with the stock market. What are we talking about? We're talking about a couple of weeks of a sideways trade. I still think we're above all the moving averages that I watch. A trade above, I'd say 6,100 in the S&P. I think we're off to the races again. I'm still a bull.
If you adjust for inflation, the S&P 500 gained 15% under President Biden. Mm-hmm. Under Trump's first term, it was up 51%. Mm-hmm. And
this is an important thing you just mentioned, by the way, too, because this has been my stump speech the last couple of appearances I've made. Everyone wants to say there's bubbles and things. No, a huge part of the stock market rally over the last couple of years is just the fact that the dollar you're buying those stocks with is worth about 65 or 70% of what it was 4 years ago. Yeah. So it's not a bubble in a sense that everybody's buying it and leveraged up to the eyeball.
It wasn't real. It was inflationary. But the point is, to your deficits, look, deficits over time will come down if, A, the economy grows faster, because, B, tax cuts eventually increase revenues and reduce the deficit. There's a supply side effect here. Plus, look, the Doge brothers, as I call them, they're not as good at dancers as the Blues Brothers, but the Doge brothers, Elon Musk and Vivek Ramaswamy, they're going to chop down the regulatory state, and they're going to cut spending. So that's good. I just don't want any of it to be delayed, Ken Polcari. And I think the tax cut, look, Trump was at the stock exchange Thursday. And one of the things he repeatedly mentioned tax cuts and talked about the 15% corporate tax cuts for domestic production. And, there's small business tax cuts. And this is 2.0. Besides tax-free cash tips and tax-free overtime, you might see some bracket widening for individuals. That would be a lovely tax cut. You might see a lower capital gains tax that would generate more revenues. That would be a lovely tax cut. Stocks want that, but if these dummies in the Senate don't want it, then I think the stock market is it's going to give back a lot of the gains.
Yeah, I completely agree. That's kind of the wild card, right? If they don't want it, or if they drag it out, or if they give them a hard time, or if they don't, do all the things that the market is expecting to happen, right? I'm in Jimmy's. Listen, I'm bullish. I agree with Jimmy. I do think we're a little bit stretched right now. I think, we never had that pullback in the fall. I think we're going to get it in January and February. I think we're going to get a pullback in the market once the new year starts, because I don't think they're going to do it now with a week and a half left, and I think Jay Powell's going to cut rates next week just because he's painted himself in a corner. I absolutely don't think we need to, nor do I think he should, but I think he's going to do it because he doesn't want to create chaos in the last week and a half, because that's what will happen. The algos will start stamping their feet, and the traders will go, we didn't get what we want, and they'll hit the sell button, which for a long-term investor, by the way, wouldn't be so bad, because I'd love to buy stocks cheaper.
Why is he cutting rates? Again, I don't understand. Inflation the last 6 months has gone up, not down.
No idea why he's cutting inflation, which is why I'm in that camp that he doesn't need to do it. Look, they've already done it. We've cut 75 basis points. We're going into a new year, a new administration, a whole new economy, and he wants to cut rates in the face of rising PPI for 2 months now, and now a rising CPI, which, may have been a tenth of a point, but the fact is it's not going down anymore. It's starting to turn up. And with the hot PPI number again this month, you can expect CPI is going to be hot again next month. So why is he cutting? No idea. Absolutely should not be cutting. You
guys remember Oliver Cromwell?
Sure.
He was very, very big in the late 18th century in England, and he addressed the Parliament and said, "In the name of God, go." That's my theory about Jay Powell. It's time for him to go.
Yeah.
In the name of God, go. Let Trump
like
appoint his own guy.
Yeah, but he just made so many mistakes. But here's what I think, too. It's from the 8-year span from 2013 to 2020, we averaged 1.5% year-over-year CPI. He's made it very clear that he wants to get the average back, I think, above his target of 2%. So when the market saw that 2.7% print in CPI on Tuesday, I think they said, well, that's within his secret range, not his 2% pretend range. And they were like, okay, he's fine with that. And that's why the stock market rallied 50 points on the news.
Well, that's a great idea. Let's let prices keep rising, and let's keep screwing middle-class, blue-collar workers.
Right.
We've hit them for 4 years. Let's hit them again, right? I mean, prices up 20%, electricity up about 40%. Yeah, let's go get them. Let's get them again.
So but there may not be any other way out of this than to inflate our way out of it. Have we thought about that, to Jimmy's point? No. I don't think 2%. I agree with Jimmy. 2% is the pretend number. I think it's really 3% is what they're satisfied with, and that's right about where we are. And although I think
it's not 3, it's 23. It's 23.
Yeah, right.
You have to put in the 20 that we just had. Okay, I mean seriously, well-to-do people don't worry so much about inflation. Working folks, working class people do. You earn 50 to 100 grand a year, you've been slaughtered. And by the way, that's why they all voted for Trump. So what Trump's got to do is get inflation down, which he could do through the energy channel. That would help.
Right.
Get those taxes down so they can take home more. And I'd like to see him install his own Fed chairman. He can't. He's not going to fire Powell. I'm just saying like Oliver Cromwell. In the name of God, go. By the way, I didn't know Cromwell. I was a few years later than he was.
Right, because you could get, Jay Powell could decide to retire. He could do that.
Yeah, now you're cooking. You're cooking. Services inflation last 12 months, 4.5%. Services ex energy last 12 months, 4.6%. Core CPI, 3.3%. Last 3 months, core CPI, 3.7%. You think that's lower inflation? I don't understand that.
No.
Help me out here.
No, and you know what? And remember, we're a 75% services economy,
Yeah.
so that services inflation number is key for people to understand.
Boring. I'm about to irritate both you guys with my next take. Are you two ready? Here we go. I genuinely believe that Donald Trump's policies it's the only path. Kenny said there's no way out of it. I think there is mostly no way out of it, but the one way out of it is through the supply side solutions you said, through about energy, and then just extend that to every other sector too. When you make it easier for companies to supply things, the inflation will go down. That's in the medium term. In the short term, Donald Trump's policies could be a little bit inflationary if he sets taxes real high, which, by the way, I still think is the right thing to do. But it could be inflationary, and the stock market could be worried about that a little bit too. How am I so wrong, Larry, that you're going to be mad at me now?
I mean, it's just if you produce more goods.
That takes time, though.
It doesn't take that much time. It might take 20 minutes or it might take 40 minutes. I don't know how much time.
We got 40 minutes.
I heard the whole story. I heard this in the Reagan year. All of Wall Street is – I'm surprised you're not quaking in your boots about tariffs. Tell me why tariffs are going to be inflationary, Jim Iuorio.
Well, first of all, I don't think tariffs in the past haven't been that inflationary.
Right.
The countries that supply the goods will end up taking most of that hit. Donald Trump was right to a certain extent about other countries paying him. Do you agree with that, right?
Yeah, that was my argument when I was at the NEC. That's exactly right.
Good. And secondly, I don't even think Donald Trump loves tariffs as much as he says he does. I think he believes they're a cudgel or it's a club to bring them to the table. And China already came back out and said, we'd love to be able to work this out. That's what Donald Trump wants. You know that better than anybody. It's a negotiating tactic. He is not a fan of tariffs. And by the way, I'd like to say to everybody who's learned in Econ 101, same as me, that tariffs are bad. Yes, but tariffs that are put on to try to eliminate all tariffs that are being charged on you, that's a different story.
Right. That's exactly right. He wants to use it to negotiate reciprocity, get all these darn tariffs down. I think that's all baked in the cake. I'm just worried. I don't want to delay the tax cuts, and I think neither does the stock market loves growth. Look, profits are the mother's milk of stocks. What Trump is saying is he's going to lower taxes on profits, which means you'll get more profits. Okay, and you'll get higher real wages. This is good for stocks.
Why do you think the Senate, or at this point the House, they're both the Republicans have complete control?
Yeah.
So why are we concerned that they're not gonna let it happen, or they're going to give them a hard time? I'm not sure. I'm not sure I agree with what.
No. I'll just tell you the politics so far. This could and hopefully will change. But Senator John Thune, who's the new Senate Republican majority leader, is talking about having 2 reconciliation bills, maybe 3. And then I just think you don't have enough. They're not. Claudia Tenney was just on. You don't know you're going to get more than one bite out of the apple because the Senate's in good shape for the GOP, 53 votes, but the House is only 1 or 2 vote margin. Very difficult. Right. So do it all at once. Do it all. Big bang. Go big bang. Do it all at once. Get the money to close the border. These guys. I love Biden's. Besides the fact that he can't figure out where the drones are coming from, they're selling off. They're selling off Trump's wall. They're selling off all the loose pieces from Trump's wall. Is that the meanest, pettiest thing I've ever seen? Yeah.
And they're spending money like drunken sailors on their way out too. Like the whole thing it's mind-boggling.
I got to take a break. I got to take a break. Enough of this speculation. Anyway. Jim Iuorio, TJM Institutional Services, and Ken Polcari, Kace Capital Advisors, and SlateStone. Well, stay around, fellas. We got one more bite at the apple. I'm Kudlow. Be right back.
This is the Larry Kudlow Show. Now, back to the Larry Kudlow Show.
We're talking stocks and bonds with Jim Iuorio, TJM Institutional Services, Ken Polcari, Kace Capital Advisors and SlateStone Wealth. Iuorio, what's going to happen to the bond market?
So I think that for the next year, I think that 10-year yields are going to go higher based on the deficits, based on issuance, based on the fact that we've already established that the Fed wants 2.6, 2.7% year-over-year inflation and not 2%. So this next year, I'm not buying anything longer than 2 years in the bond market. I think the curve steepens out back to its historical average of about 100. But by the way, I actually think if the other side had won the election and was still going to continue just the spending with this high regulatory environment, I think buyers in the bonds would have backed off a lot more than they're going to here. So I think it's a better situation. But I think 10-year yields could go to 4.75% to 5%. I think if they went much over 5%, I think the Fed comes back in, which I think would be an awful mistake. Hopefully the next Fed chairman will have more sense than to do that.
Ken Polcari, what's your outlook for stocks? What's the best place to invest right now, you think?
So my outlook is I think we're going to have some weakness in the first, January, February of the new year, and which wouldn't be bad. I'd like to see the market actually back off. Even if it went down to the short-term trend line, that's a 3% pullback, which isn't really even a pullback. I'd like to see it, go 5 to 8% would be nice. 10% might be okay. But that being said, then I think the market settles down. Now it starts to focus on the new administration and what's happening. And look, I'm looking at like as a wealth manager and broadly diversifying, remaining that way, but putting more money on a pullback back into quantum stuff, which is kind of one of the new areas of AI that's suddenly getting all kinds of chatter. IONQ, QUTM, or a couple of QUTM is an ETF. Sylvia Jablonski's, but there's a couple of names out there that are very, very interesting, as well as just regular AI and tech, right? I'd love to buy more NVIDIA, but I'm waiting for the pullback, right? I'd love to buy other.
What's quantum stuff? You mean quantum computing stuff?
Quantum computing that's going to start to change the face of even the way AI is going to be is going to interact and create. It's been really suddenly it's been very, very. They've been talking about it a lot, and some of these companies are talking about the role that they're going to play now in the future of AI. So it's very, very exciting and very volatile. So understand that, very volatile.
What's
so
a good?
Slowly, if you do.
I know you gave us the letters, but what's a couple of companies for quantum computing?
IONQ is one. It's like a $33 stock, but that's I bought it at 37, trades down to 26, back up to 33. It's very volatile, so you have to know that going in. But then Defiance ETFs has one. It's Sylvia Jablonski, and I think it's QTUM is an ETF that has, and I think it's up 50% or something this year. But within it, look at the names within it. Again, they're all mid-cap, small-cap, and mid-cap names, so they're very volatile. But some of them are up 300-400% on the year. So it's been very, very interesting. But I think it's going to be a very interesting place in the new year as we talk about, how AI continues to develop and change the world.
Thank you, fellas. We appreciate it. Jim Iuorio, Ken Polcari. Thank you very much.